Bitcoin is facing a turbulent start to the week, with its price dropping below the crucial $98,000 mark. This sharp decline isn't just a story about cryptocurrency volatility. It's part of a larger narrative tied to the global tech sector's struggles. Stay with us as we unpack what's driving Bitcoin's price drop, how a Chinese AI startup is shaking up the markets, and what it all means for the future of digital assets. The world's largest cryptocurrency, Bitcoin, fell by 5% to $98,432.54, briefly touching lows of $97,750. But it wasn't just Bitcoin. The broader crypto market also took a hit, with the CoinDesk 20 index falling nearly 10%. So, what's causing this massive sell-off? A big part of the blame lies in the broader sell-off within the tech industry, sparked by a game-changing announcement from a Chinese startup called DeepSeek. DeepSeek claims to have developed a competitive artificial intelligence model for a fraction of the cost typically associated with US tech giants. This announcement sent Nasdaq futures tumbling by 4% in early trading, triggering a ripple effect that extended to cryptocurrencies. Even major crypto-linked stocks weren't spared. Shares of Coinbase and MicroStrategy dropped 6% and 5%, respectively, before the market opened. The hardest hit? Bitcoin miners tied to AI projects, such as Core Scientific, down 18.5%, TeraWulf, down 14%, and Iron, formerly known as Iris Energy, which fell 10%. Why Bitcoin and tech are so closely connected? Here's where it gets interesting. According to Jeff Kendrick from Standard Chartered, Bitcoin's performance is strongly correlated with the Nasdaq, far more than with traditional assets like gold. When Nasdaq futures dropped 3% on the back of DeepSeek's AI announcement, it triggered a wave of digital asset liquidations. In fact, over $250 million in Bitcoin long positions, bets that the price of Bitcoin would rise, were wiped out within 24 hours. This highlights a key vulnerability for Bitcoin: its increasing dependence on the fortunes of the tech sector. A lukewarm response to crypto regulation adding fuel to the fire. The market is still reeling from a mixed response to President Donald Trump's executive order on cryptocurrency. The order, issued last week, failed to deliver the strong commitment that many in the crypto space were hoping for. Instead of focusing on creating a Bitcoin reserve, it emphasized the maintenance of the government's existing Bitcoin stockpile. This regulatory uncertainty had already created a fragile market environment. Bitcoin hit an all-time high of over $109,000 last week in anticipation of the order, but the lack of clarity left traders disappointed. When coupled with the broader Nasdaq sell-off, it set the stage for the current decline. What's next for Bitcoin? Looking ahead, all eyes are on the Federal Reserve, which is set to conclude its latest meeting this Wednesday. Investors are anxiously waiting to see if the Fed will adopt a more dovish stance, which could provide much-needed relief to both the crypto and tech sectors. However, there's also a lingering fear that the Fed may not be as accommodative as the markets hope. Amid this uncertainty, some experts remain optimistic. Joel Kruger, a market strategist at LMAX, urges investors to focus on the bigger picture. He says, "When we look at the Bitcoin chart, there is nothing bearish about the price action." His long-term view suggests that the recent volatility might just be a temporary setback. The broader implications: this isn't just a Bitcoin story, it's a snapshot of how interconnected the global financial markets have become. From AI breakthroughs to regulatory uncertainty and tech stock sell-offs, Bitcoin's performance reflects a larger narrative of innovation, competition, and risk. So, what's your take on all this? Do you see Bitcoin's recent drop as a temporary dip or the beginning of a larger trend? Let us know in the comments below. And before you go, don't forget to like this video, subscribe to the channel, and hit the notification bell so you won't miss any of our future updates on the world of business and finance. Together, let's navigate the complex and exciting world of cryptocurrencies and global markets.